So what we have at the moment is this software here, which is called the Edge Finder Pro. Guys, is a really good investment. This is just another confluence. In other words, what that means is you need to use this in conjunction with a trading strategy, which is a technical one. So you have economic understanding and then you get the technicals. I do find that technicals are one of the strongest ways you can do things, guys. But it's having an economic backing just gives you that much more confidence in knowing that the market could move in your direction. It's not going to move in your direction, but it could. So this is how we do it, okay? We need to go and chart. So how do we do that? We need to use another software then, therefore, called TradingView, guys. So what TradingView basically helps you with is just it gives you an incredible platform to create your plans. Now, if you don't have a plan in the market, you're technically just trading, hoping that the market's going to go in your direction. That is called gambling. Okay, you need to have some sort of edge in the market in order to become profitable. And I mean that, guys, you become profitable. So you're going to have some losses and you're going to have some wins. Now, with regards to your risk management, how much are you actually risking and how much are you making? And if you don't understand that, then there is the biggest problem in trading for you. Now, let me go and show you what we had over here, the Edge Finder. Let's go look at the Euro USD ZAR. Let's go look at gold. And then I think the next one I want to go look at is the AUD NZD. So we've got these three that we're going to go look at 1, 2, and 3 for a buy position. Up here, I've already got the AUD NZD. Let's just start with that. I'll click into the market and then we'll be like, let's go and actually do some diagnostics. Now, how do we know when the market is ready to sell off or anything like that? As you guys can see, I have an area here that it's just touched, looking pretty decent for a sell-off. But we also still need to make sure that, remember, we've just looked at economic data. So now what I want to do is I need to actually go and see, is there a position in the market that looks good enough to buy from? And the only way I can do that is by cleaning all of this up. And let's go and look at it from a higher perspective. So guys, as you can see, we've technically been bouncing in between these two levels on a high time frame, which technically, guys, is a bit of a consolidation. But for a short-term period, we look like we are actually moving upwards, which means we could be seeing a break of this high or even a movement to the next high. So I'm going to put my little level at the top there so I know that's where this market could want to go. And I'm also just going to highlight for myself just so I do know, put a little line here saying that this is one of the highs of the daily time frame. Okay, so I'm going to go here. I'm just going to tell myself this is a swing high on that time frame, knowing that we can still go higher, but it is the highest it's been. And then if we just look at this, guys, we've had a nice push and we've broken through the structure here. So I'm going to label this also a break of structure, just so we know, okay, the possibility of this market still going higher is there. So we need to go there, break of structure. And now I want to also go and just look for my candle patterns. And that is as simple, guys, as just looking at it from this perspective. We have a candle that is much bigger than the other ones. So if I just quickly go and highlight this area here, label it and say to myself, okay, cool, this is a potential buy zone, which is the one. Remember, in a high time frame, meaning it's very good. But then, guys, even though that is there, we still need to say to ourselves, okay, is this the strongest one? And you can't really say it is because we do have an unmitigated demand zone up there. So even though we have a good analysis on this one, the board here, you see it's only a 5, so we don't want to just say put all your money into one position because then what happens? Then if it's wrong, you're wrong, and that's the cut. So we want to give ourselves opportunity to be like, okay, I don't mind risking over here because it can be a position that we're not sure of, but we can still take a risk with a small fraction of your account. So now you're actually getting a better understanding that the market can go in any direction still. Doesn't matter how many confluences, it doesn't matter how good your trading strategy is, there's always a possibility of failure. So we don't want to be caught with our pants down and putting everything into one thing. Now, what I'm going to do, guys, is literally just tell my brain that this is the kind of movements I want to see. I want to see a rejection and then a retest to go back up. And if we don't get that rejection and a pullback, then we shouldn't be entering this area. Okay, now if it does do it, I will trade it. We can also see that the area could push down possibly to here even, and then move back up to here, and then do the same thing and move higher. So I'm looking at something like this for the week, and if I get any of these happening, then I'll most likely take them. Okay, and that is as simple as it gets, guys. So high time frames, looking for everything. And now that I've got my just of where I want to be, I'm also just going to make sure on the left hand side here, I'm looking for other patterns that have like caused reactions, and I have seen something here which is quite cool. So over here we see we've had a hit and it's moved back down. So this definitely looks as if it wants to retest this area, and if it does come down, we could have the buy to the other area before a more of a pullback, because we still are looking at the market from a different perspective, guys, all the time. I don't want you to ever think that you look for a buy or a sell. You're looking for buys and sells, so you know where to take the market for a ride. And if it doesn't go according to your plan, then you have another plan for that. Good job. So far, guys, what I'm seeing here, this looks pretty decent. I like what I'm seeing here. That's going to be where my entry level is, and stop losses will just go below there. And if that doesn't work, then we've got another demand area that I'll look to take. I think some people would like to use Fibonacci retracements. I can also go into that. I just want to make sure this is straight and beautiful. Okay, cool. And then I'm going to label this as my entry zone. So see you guys, structure, push up, pull back, possible movement higher. That's going to be my trade here. Okay, that's what I'm looking for. I'm not going to make it any more complicated. I'm going to also just take one of these away, because now I know in the back of my head what I'm looking for. Now if we go into a lower time frame, you guys can also see that we have a possibility of a beautiful liquidity grab here. Now all of this is money, guys. All of this is technically, what people are forgetting is that you normally would put your trade or your stop loss underneath the lowest low. So again, most of the time, impulsive movement, people would normally try to like say, okay, bounce, next bounce here, when it pulls back, we're going to trade here. But I like the fact that we can have a liquidity grab, all of these people getting knocked out, and that last wick getting knocked out. And if we use the Fibonacci retracement, you'll see how nicely this falls into play. And as I've always said on some of my other videos, guys, we are looking for the golden zone. This is your golden zone between the 61 and the 78 retracement level. So now you guys can see, one, we already have a really good movement up. Two, we've broken a structure. And three, we've also identified an area that could actually be the long-term sell-off position, which I've just showed you guys here by doing an analysis for the highest swings. So if we are going to be taking this trade, it would definitely be something like this. Okay, so that correlates perfectly with the Fibonacci retracement extension levels, which is what I like seeing. So if that one doesn't play out, then we will be looking for a lower level, and it will be a better position. And if it does, as you guys can see, again, we're looking at finding ourselves in another area with the golden zone perfectly intact with the demand, and I really like that. So my first attempt on this would be there and then there. So I want you guys to just remember, when you're trading, if you're not actually incorporating the possibility of being wrong, you're going to hate yourself for it, because you re-enter the markets too often, or you get revenge trading. On top of all of this craziness, you have your life to deal with as well, guys. So if you think about it, if you're losing trades and you're constantly trading, you have revenge trading, what happens is you get into a very bad mental state and you think you need to keep trading. You actually just need to wait for a different position in the market. My number one rule is move away from the market for 24 hours once you've lost. But that also doesn't mean don't go and look for the opportunities. Always make sure that you're coming back, because there are so many opportunities in the market, guys. And I've seen for myself, when I even do a bit too much trading, I end up losing a bit. And you start doing that more often, you start to realize that actually there's so many opportunities and you don't have to take every trade. Okay, next one, go to the Euro USD. So guys, you can see I like to trade in higher time frames, takes away all the other confusion and stuff like that. So we are going to go for the USD. Here, and and you can see I've already got a setup for you guys. So let me just do this again just to show you guys how I find all of these things. We go firstly to the daily time frame and we just look at it. Okay, so if we have had this was a low and that's the high, what kind of trading strategy is this, or what kind of movement are we in? We're looking very bearish, guys. We haven't had any high time frames push or anything. We just had a nice push from the euro, but I'm seeing that there's definitely a rejection zone up here, possibility. As you guys can see, big candle, small candle. This is what I trade to find my supply and demand zones. And we've also broken a level of good structure here. So when we put all of these things together, then we know for a fact we have some sort of trend continuation, I could say, or we can have a what do you call it, a continuation on the other side. I just want to make this big structure. Okay, and then guys, just like any other trade, we are always looking for the next movement. So if we've had an up, a down, up, you see, so all we're doing is we're looking for the next movement down. But what we need to do still, guys, is look at the data. What has happened? What can we do? Can we find anything that shows that this is a possibility for something else to happen? And if we are trading on a high time frame, this kind of happens quite often. I think a lot of you have seen it before. So what's happening now is, as you've seen here, we've had a movement more down than up. Okay, so we've had an uptrend, if you can see, like this, and we're up, and then it starts to break. So when it breaks like this, so what I'm going to show you guys now is when it breaks, then now we start to see the market doing what it's doing. So what we want to try and do is, all we're doing is this retracement level is how we are going to try and find the next sell movement. And I want to try and see if we can predict this well, because if we do, then we've got an absolute beautiful trade opportunity here. And they call it a QM. Okay guys, so it's called a Quasimodo. I don't really know how to spell that, but it's part of the trading strategy I use in conjunction with more candles. So guys, when we have a break of a uptrend structure, then we are looking for a pullback to a new sell zone, and it's easy to find them because you can use retracement level. Guys, I'll do another video if you would like on the Fibonacci's, but as you guys can see, this area is perfectly positioned just by the Fibonacci, which means it's a significant level, and we want to trade it because there's going to be people trading this level. It's got your economic news backed by it. It's pushing towards the area due to bad dollar news, and this is why I like using technicals in conjunction with your fundamentals, because then if you see a good supply or demand zone, the market is doing some sort of trend movement, you can jump in on this account. So what we're going to be doing here technically is scalping from a buy to a sell, because we have good news telling us that, hey, listen, this is a very decent buy, and then we having a movement here that we can see, oh, listen, there's actually a structure here that we still need to test to see if market is going to respect it or violate it. And we don't know what's going to happen, guys. So what we want to do is just be prepared for this. It has to come to this level. That's a guarantee. Regardless if it happens today, tomorrow, if it's lower, it will eventually come to this level. So I want you guys just remember that. And we are just looking for this area here. If you're thinking about it, this entire area here from that movement to here can be your trade that's just like moving like this. Normally when the candles are much bigger and they're being pushed in that direction, then you kind of have to remember to yourself, say, hey, listen, that's a strong movement, I don't need to be selling this. But for this, guys, this is a perfect correction movement that we are looking at, and I think from my perspective, we are going to have a small pull down, push back up to here for the real sell, straight back down. Okay, and the nice thing is we are just in that correction phase over here. So I'm going to just delete all of this stuff quickly, just so it doesn't confuse you guys. And then what we're going to do is also just find on a high time frame. You see, yes, look here, it's an extension. So this could be the actual fall. This is a long-term trade. So I'm going to even label this to myself just to make sure this can be swing trade. so I can remind myself not to be stupid in the markets. And guys, the more you do this, the better you'll get at understanding where the market's going, because we don't know. No trader knows, because if we did know, then why would we even be trying to help people understand the psychological barriers that people have in trading? So yeah, main thing is just be consistent with your strategy. So that being said, guys, I now know that I actually want to be selling the market at a higher point. So I'm going to put this here. That's the sell level. And then how do I find my buy level? All we're going to do, guys, we're going to go back down to the daily, to the 4 hour, and we're going to look again. What looks like, oh, there we go. So this is how I'm finding these areas, guys. There is a beautiful demand zone here. So I'm just going to label this demand. And then also, guys, because we are in a retracement or a correction, we need to now just remember that when we're entering this trade, it could go against you. Why? Because we can see that it isn't actually in a perfect uptrend. We are still in a downtrend. Even though my data on the other side is saying this, I can't just be like, oh, definitely buy whatever, who cares, I'm just going to buy this market. No, we need to have places in the market where we're going to buy, exit, and also just watch the market push. So I have an alert here already waiting for it. It's a type 1 4-hour buy, which is technically the strategy I'm trying to teach you guys, which is this one. So we are looking for a smaller candle within a bigger candle, and you can see that definitely is engulfed it. So we will take that as a perfect buy positioning. And if you guys look on the left hand side here, there is another one over here. So we never ever are just randomly buying areas or selling areas. We have a reason for it. Now for a short term buy, I'll still use the Fibonacci, and remember, guys, it's just basically finding the lowest point and going to the highest point, and there needs to be some sort of break of structure in order to use the fib, from what I know. Now this is perfect. As you can see, we have a small amount of liquidity here that I like to make sure we grab. It comes into the market, pushes back up, comes back down, retests, push back up for a big fall. So that is why I'm actually going to be buying this market. I think it is a perfect setup, and that's what I'm going to be doing. And then let's go on to our last one. We're going to go do, I think I said I'll do gold. Let's go check gold out. There we go. I wonder if it has got to my level yet. No. Okay, guys, so let's do that one more time. Let's go and rinse and repeat. Look, as you guys see, you can see there is no gold being shown here. So technically it means that it's not actually in any trend or has anything happening for it. But we can still go and look on the software here. I will find it now. We should have a data scanner gold. Let's go see what it's saying. Let's just bring it up. So it's still saying it's quite bullish, guys. It says there we have more people are trying to go with market sentiment. So you see we have a lot more people backing the buy than the sell. Okay, so when we do this, guys, we just need to make sure that, remember, everything comes with a pinch of salt. You're going to be wrong in trading. So I can see this is definitely looking like a buy. But if I go look at the market at the moment, and what I'm seeing is we've had a very high, a new lower high. Sorry, we've had a higher high, and then we've had a lower high, and then it sunk. So we've had our first break of structure. So this had happened, and that's a good significant movement now, because you can see it hasn't pushed any higher. And because of that, guys, I will attempt to be selling this area when it hits it, just because of that reason, and that reason only. Now, just because my software is telling me it's a good buy, I don't just go and buy it, right? If it basically has a good enough reason for me to buy on the technicals, I will. But if it doesn't, then I'll wait for the market to show me that we are in a more of a buying situation than a selling, because we've already had like NFP, and the dollar was actually quite weak there. So the fact that the market didn't actually destroy this area and come back up shows it's quite significant. Okay, so only when this happens, if this level breaks, then I will consider a buy. But right now I'm actually more biased towards the sell perspective because I trust more technical analysis than software. And I want you guys to do that too. Rather not let other things cloud your vision. If you can see clearly that something's happening in the market through candle movements, price action, whatever it is that you're using, trust that more than anything else. Okay, because at the end of the day, we need to be consistent. So I have a break of structure if it comes to it. So this is where I'm looking for it to break of structure, and then that comes back down. But other than that, guys, I'm looking for this movement. We want to go in here, and then we're going to push down. And if we go onto the high time frames, guys, this is why I do love it. So the fact that there is actually a buy sentiment already, I can't actually see any area that has a massive buy. So we just have this level here, which is good structure. So we'll wait to see what happens there. If I go drop down to the 4 hour, do we have any more of those engulfing candles that I look to trade for? We do have one here, but I don't like its positioning. And because of that, I don't think I'll take the buy here, guys, because this is very alarming. When this normally tends to happen, it's actually like a very good place for liquidity grabs. So I'll just remind myself, hey, listen, there's a liquidity grab possibility here. And I'll actually need to just go sweet. So now, guys, I actually know the possibility of this pushing down to here is actually there. This can happen. Okay, we have hit a very good area of buying, but I'm not convinced with the fact that NFP came out and it didn't really move the way I know that the market should move. So I'm kind of like more leaning towards the fact that this was a liquidity grab. Delete that not to confuse anyone. There was a break of structure. We've had movements. We have not had any other show that we are ready to come back up. You know, like that's why I'm seeing this. This is kind of what I'm seeing, and I can be proven wrong, and that's totally cool because my risk will only be up here, guys. That is literally all I'm going to be risking from this entry here to there. If it breaks through, then I know I have the next possible impulsive movement pullback to a support structure, which will technically then become support, which will be a demand, and we will be moving upwards. But until that happens, I'm just going to leave it as it is. Okay, so now you guys see like how simple it actually can be. And you know, you can always go drop down into the lower time frames, and then just like if you want a better or a more of a sniper entry, just keep going into the smaller time frames, guys, and kind of look for the engulfing candles. So I don't see one there, so it's going to the 1 hour. Do I see any engulfing candles at the moment anywhere? Nothing really like powerful. I can't see anything there, but I do see what I do see happening here, guys. This could be the next liquidity grab. So we just need to make sure that we spot these things, guys, and don't try and jump into the market every time you think it could be a good trade, because it's not about thinking it's a good trade, it's about trading. Okay, and if we're going to trade, what is the number one thing that we are doing here? We are trying to find places in the market that have the most possible reaction. Okay, and the more evidence you have to support that area, then you should take the trade. Now, most people will fear a trade because they are scared of being wrong. You need to be wrong. You have to be wrong. We are trading, we are risking, we are learning how the market moves. And in every single trade you take, you're going to learn that the markets are unforgiving, but at the same time, so easy to read. We just need to move away from the market when we trade. Okay, and finally, guys, the one thing I do want to show you is that if I go to one of the trades I'm actually in right now, is I think the CAD, and I want to show you why. Okay, let's just go out here. So I've just entered this trade. As you can see, liquidity on the left hand side, markets moving back up, very, very powerful movements. but we are still in a movement down. We've had all of this area being taken out for a beautiful ride. But let's go and do diagnostics. If we go to here, we're looking for the NZD CAD, top setups. We don't see anything to do with the NZD CAD, do we? NZD CAD, no. But then I can do still the data scanning. Let me go and check here for you guys. Let's go smart money. This is a really cool one as well, guys. This is basically just going to help you with positioning in the market. So it's like, what are people doing? So sorry, go to card data, and we'll show you who's being backed the most. So if we go to beforehand right hand side, as expected, gold is absolutely being backed by everyone. So we should be looking at buying gold. And like I've said, I don't go against my technical analysis. If it doesn't show me that I have a buy or a sell, I'm not going to take it. But even if it is contradictory to my trading software, that's cool. I'll be less aggressive in my trades. Okay, so if we just go down to here, NZD isn't really being backed that much. Okay, and then considering the CAD isn't being backed that much. So these two are definitely in a position where I don't even know them. But because I have a strategy, I'm going to show you guys that this kind of market can always be seen so simply by just checking it out. So now, remember, as I said earlier, guys, we are always looking for what is the best possibility here. Okay, so we have had a higher low concept here. Okay, so we've had a movement here. This actually didn't break the high on the left, so we don't consider it. Then we've had a movement there, and then it broke down, it came back up, it went down, it came back up, it went back down, and then it broke a very, very significant area. This was big, guys. That's a big break. That is huge. So this is actually irritating me. Let's just actually go here. So you see, it didn't make a new high, came back down, tested an area, came back up, made a new lower high, pulled all the way down, made a new low. So we are still in a movement that's possibly coming down, or if not, it needs to break that high, then we're going to come back down, and we'll see what happens. So from what I'm seeing now is that because we've had a break of structure over here, guys, very important to realize that. Then now what we're going to do is just double check, do we have any engulfing candles? What is actually happening? We do technically have here a engulfing candle, but it looks like the market is actually more aggressive going upwards. Okay, so over here I have actually decided not to take such a big risk. It's only 0.3% of my account, and I am trading on a funded account, guys, so I literally have $15,000 to trade with, and I'm doing the exam. So I'm just going to highlight this area that it's in, so that entire width of area is still a good positioning. And if we look at it from this side, we can see that this here is a good break of structure at the bottom, and we just need to make sure that we remind ourselves of this on a higher time frame. So if I come back down here, I can see that we do have an engulfing candle. I don't really like it too much because that's not too powerful, but this is very significant, guys. That is a big push. So if I was somebody that is learning for the first time, this is not someone you want to actually be selling, but I will sell it. Why? Because I don't know if it's going to go in my direction. But on the left hand side, I have my candlestick pattern, guys. So regardless, you need to make sure that when you see your strategy, you trade it. You don't hesitate, just do it. And you'll start to realize, like, if you are only risking a specific amount of money in each trade, and you know your trading strategy is good, then you don't have to be worrying about whether or not you're going to be right or wrong, because that, in my opinion, is the perfect place to trade, and all I'm doing is risking it up to the top. So the way you guys can double check this is, guys, just check this out. You get the short and long position. So my entries are about here, and I want to take my trade out there, and then my stop losses are just about there. So now when you hover over this, guys, you can see on the right hand side here of this trade, I'm risking 22. I hope you guys can see it. It says 22.8 pips for a total of nearly 80. So that's nearly a 2x. Okay, so that's not bad. It's not a bad trade at all. Not the best, and not the worst. And that's all I'm going to do. Now, when we look for a buy on this, guys, because remember, as I've always told you, you want to look for buys and sell, then I will do this. I'll look for my Fibonacci retracements, go from the bottom to the top, click on it, and then I'll go and see, okay, cool. In this area, do we have anything that looks quite delicious? I do like this, but I don't like this at the same time. I do like that, but I don't like the fact that all of this has come together. So I will definitely go 2 hours deep, and then we can see we've got a golden zone here. There's an engulfing candle here with a little bit of liquidity, but this one looks better. So I'm going to put my alert here, and it's on the freaking perfect place, because that's exactly where I like to trade, guys, on that level inside this golden zone. So I'm just going to label it here for you guys. This is called the golden zone on the Fibonacci retracement level. Okay, golden zone is always in between, guys. The 68.1, I mean the 61.8 and the 78.6. This is just one of the coolest kinds of trades. So if we do not get a pullback to here, then probably go higher. But if we do, then it's very, very likely that it'll either hit the top here or even go higher to the extensions. Okay, so that's what you could be looking for. Okay. But because of how everything's moved, it's broken its structure, it's making some liquidity. I will be in this trade right now, and I will be watching to basically sell to the buy, and yeah, let's see how that goes. I hope you guys are really enjoying this video. Best thing you guys can do if you really need some extra help, I'll be putting links in the description below. I've got there my weekly training sessions that you guys can join in on. You can also join the free training room, where you'll also be getting a little bit of information and the screenshots of the heat map and whatever else you guys are looking for. Come and join an incredible opportunity here. This is a community that I really want people to do well in, and I know how hard trading can be, guys. I've lost a lot of money in trading because I had no direction. I didn't have anybody helping me out. So I just really want to be able to facilitate a great community where we all can prosper, really all grow, and you know what? Let's earn some money online. Let's change the perspective of having to work a 9 to 5 and always have to, like, you know, listen to somebody else. I mean, why not we all just do our own life? And I really do think through the Forex markets and having a good team or community backing you, you will always be able to prosper. Anyway, guys, don't forget to check those links up at the bottom, and wait for the next video. See you soon.